Greetings and thank you so much for tuning into my YouTube channel. I'm going to talk about how to invest in the XLRE ETF. Basically, an ETF is when investors pull their funds together, and then you have a fund manager who then buys uh, specific securities. So in this case, I'm going to share more details about this. But before we get started, I just want to disclaimer that this is content just for educational purposes. As such, it is not supposed to be taken as investment advice. And basically, this fund is very interesting because it focuses on the real estate. So there are some people I know, including myself, who want investment in real estate. So I thought this fund might be interesting, so I'm sharing this from my research, and I'm going to share, portfolio composition, historical performance, what I think about this fund, not as investment advice, but just my thoughts on this fund. And for those who don't know me, my name is Isaac Jonas, and I'm very passionate about sharing personal finance and investing information for educational purposes. So I like, investing in the stock market, particularly the US and Canadian stock exchanges. So that's why I'm doing this. Now, this particular fund, the XLRE, was founded in uh, October 7 on the 2015, at least from the SSG Global, which manages this fund from their website. That's where I got that information. But it specifically tracks the real estate sector of the S&P 500 index. So the S&P 500 has different sectors: finance, technology, which has most of the weighting, I think about close to 30%, and finance, retail sector. So this one particularly focuses on the real estate sector, and they then takes those funds or companies that meet the criteria that are within the universe of the S&P 500 index. And currently, as of uh, the day of recording, it had about 5.7 billion assets under management. So it's a big fund actually, and it generally tries to mimic, like I said, the real estate select sector index that is within the S&P 500, and it offers precise exposure to real estate trusts, investment trusts, excluding mortgage real estate. So this is a very key thing. And then real estate and development companies. So what then happens is that, let's say someone wants exposure to real estate without maybe putting in a lot of money in the down payment, because the shares, they can go for, as let's say today, I think they were trading around 30 something dollars. Then what it means is, one can start by just buying those shares, but it's important to consider the other information that I'm going to share below, to just make sure you have an idea of what comes with buying into a fund like this. And it has very good volume, just from the information I saw from the website of SP State Street Global Advisors. Previous day on the 13th, I think it had about 3.24801 million volumes in terms of the trading of the share. So this is very good because you want to get in and get out easily. And now the other thing that I look at when I invest in a fund is the performance. So if I compare this with in the sector, the performance of the benchmark in that sector, you can see that it closely mimics uh, the index. But you can see here that there are some months, some years, like year to date, it is still in the negative. But if you look at 1 year performance, it's still in the negative. It's still recovering. It is very interest sensitive because real estate, most of these funds, they borrow money from the bank. So if the central bank or other macroeconomic conditions change or become unfavorable, they are quite sensitive. It might actually decline. But if you then annualize it on a 3-year basis, it is positive. You can see that it is around 4% for 3 year, around 4% actually, and then 5% 5-year, and then since it was started in 2015, you can see that it is somewhat close to 6%, which is similar to the return on real estate, because when you buy real estate property, it's important to factor in all those other things that come within, renovation, maintenance, lawyer fees, so over the duration of the mortgage. Now, in terms of the portfolio composition, you can see that it is, a huge weighting on the specialized REITs like real estate trust, and then industrial REITs, which are basically some units, like a fund then, let's say, can buy those specific shares, and then, in a specific like industry in this case. And it is uh, quite diversified in that sense, because it's not just one industrial company or building. So they are quite different, covering different sectors, so it offers some diversity, which is good. And you can see that it also invests about 3% in office real estate trust and hotel and resort real REITs. So it's diversified within the real estate sector, which is, I find, interesting. And you can see that these are some of the top holdings of this fund, actually, for this fund, and this is for the index. So it mimics the index. You can see it's quite similar. It just differ slightly here, but it's very much related to the real estate index, right? And I have already shared some of the information here. So if you invest in this ETF, it means we have exposure to the American real estate sector, for a very minimum amount. You can see these are the top holdings, Prologis. So that's different from investing in one individual company, because if this one fails, then you are down, you go down with it. So this is diversified within the real estate sector, and it does offer real like good dividends. I once owned this, and I sold it, but it paid out good dividends. You can see that ordinary income here. You can see that in 2023 it paid $1.30. It means, so if you have 1,000 shares, you can get $1,326.53. So that's good for the year. If you are at that point in life where you need dividends, then that's good. Now I'm going to quickly walk you through like how to buy it. I've explained this in other videos, you can check them out. But for those who are first timers here, you can see that for me, I use my broker Quest Trade, and I'm not necessarily promoting them, but this is the interface that they have. You buy here, you click buy, but the first thing you have to search for the ticker name for this, which is XLRE, and then it gives you these options, right? You can see that today it was, when I took the screenshot, it was trading at $37, between $37.72. But those folks who were willing to sell wanted to sell at this. So I just click this, because sometimes I just, if the spread is not too much, I just click this bid, and then I take let's say 100 shares or whatever shares that I want. And just be careful also on the on the account that I will be using. I was just using the margin to just show you guys how to go about it. So you see that here, once you click here, it gives you this option. Then you click the number of shares, let's say 100, and then I click bid. It gives me, it automatically populates this. I can say until it clears, or at market price. These are some of the options here, and I buy. If I want to sell, I do the same. So this is the same, right? And then this is just the process that comes after that, the fact. So you see that in conclusion, there are merits to investing in this fund. It is diversified, it is convenient, it has low fees, it is tax efficient, and liquidity. It's quite liquid, and it's managed by a reputable fund. And the good thing is that it's diversified within the real estate sector for those companies that are within the S&P 500. And however, like investing in every stock, there are market risk, inflation risk, credit risk, liquidity risk. In other words, liquidity might fluctuate, and when it does so, it might be challenging to sell depending on events. But generally, the liquidity is good. Also, market risk is diversified, but within the real estate sector. But things can happen. In the US, there has been situations where things go to the extreme in terms of specific sectors, like the real estate bubble that happened when there were subprime mortgages. Now, in conclusion, you can see that this is managed by one of the top firms around the world, but also it offers exposure to those